So today guys, I'm going to be sharing with you the trade I caught up yesterday. I didn't manage to record the whole of it because I had to go to school, right? So I was just screen recording some of the uh, actions I was taking. So I'm going to go with you through all the trade management, how I entered, the confluences I saw for me to be able to enter that trade, and how my positions closed. As you can all see, today we are going to be doing our analysis and our trade update in the kitchen. Is because I woke up pretty early, 4:27 a.m. in Russia. There'll be no a lot of activities. People will be still sleeping. So since I'm a student, I have also to be fair to others, not make noise for them. Also, I'm aware, and I just had to bring my monitor and a few stuff so that I can just record this video and prepare for my next lessons I have. Without wasting much of our time, let's get straight into the analysis. Um, Yesterday, I pretty much saw this move in the 1 hour time frame, right? I pretty much saw this move in the 1 hour time frame. You see, when I'm trading these positions, every pair I trade, usually, most of the times, not all, most of the times, I analyze my trend in the 4 hour and 1 hour time frame. Right. After analyzing my trend, then I look for areas of interest in any time frame, which is either 15, 30, 1 hour or 4 hour area of interest. After I see an area of interest, I look for additional confluence. Right. I shall post another video on the whole strategy and the additional confluences I'm talking about. After an additional confluence, I then look for an entry signal. My entry signal is only a candlestick pattern. That's the only entry signal I take. When I see a candlestick pattern, they usually happen in the 15 minutes. So yesterday, right, one of my confluences that led me to taking this trade is the 200 exponential moving average in the 1 hour. This is a very strong confluence. Almost every time it is like I don't know in statistics, but I would approximately believe that it is nearly 80 to 90% of the time when it bounces on the 200 exponential moving average in the 1 hour. The move continues to go in the with the respective trend, you see. So I'm seeing that in my 1 hour there's an uptrend, even though I do not have a trend line. Right? I use trend lines. I also use market structure. I use mental market structure that seeing higher lows and uh, higher highs, higher lows and higher highs. So those are the things that help me see my trend. So seeing that we are in an uptrend, right, from the market structure in the 1 hour time frame, I saw a 200 retest, right? It was a 200 retest. From there and then I went straight to my position calculator. Maybe I shall show you. Um, so on the position, I was willing to risk 1.5%. It's not every time I risk 20%. I risk 20% when I have a sensation, when I have a strong feeling that this move is great potential. Right? Like for example, the one that was on gold, even though it was disturbed by news. So it's not every time I risk. Here and there, I risk a huge amount, and I don't risk like full margin. No, I just risk a portion of my account. Let's say 10%, 20%, maximum 20%, like uh, what I did on Thursday. So yesterday on Friday, right, after seeing the 200 EMA test in the 1 hour time frame, I saw that I had psychological levels. These lines marked with green, these horizontal lines marked with green, they are my psychological levels. These are areas where big gauge funds and other big capital traders, right, they like to place their orders on these round numbers. So on these round numbers, I very well know that they they are usually they are usually what? They are usually um, strong entries there. So after seeing that it is on my psychological level, I also saw this consolidation area, like it's an area, it's a strong area of demand and supply. It's an order block, a strong area of demand and supply. So this psychological level, it is the one causing this order block, right? And while causing that order block, this psychological level, it was being respected many times more than the other psychological levels. So it creates an order block, like which I put my template as the demand and supply. If it is low and long like this extended to the far right, it is a demand and supply zone. If it is green and short and not extended, it is just a simple break and retest. So these are the templates I use. And after this, I came back to my lower time frames to look for an entry signal, right? And in the 30 minutes, I was seeing a dragonfly doji candle, right? So as I was saying, seeing a dragonfly doji candle, right, in the 30 minutes time frame, there were four weak rejections. The first one, all of them on the psychological level. The first one, the second one, the third one, and the fourth one, which is also doji candle. And then I came to my 15 minutes time frame. I saw this small area of consolidation, and after this huge engulfing candle, I entered on this second candle. So I look for a first candle, then enter on the second candle. Right? Huge engulfing candle, then entered on the second candle. So this is how I pretty got into my position. When I calculated the position, right, I put two positions. I added two positions for 0.05, but the stop loss, if I wanted to risk 1.5%, it was supposed to be, the position size I was supposed to take was approximately 0.11, right? 0.11 lots. So I ended up taking two positions with 0.05. And when I was coming from school, um, checking my trade on the way, right, I had to go to school, but I was called for the other students, the other new students who are coming uh, for their master's degree, but they do not know the language. So I was called by the dean to help them, because here in Russia, you never help yourself using English or any other language. They only speak Russian. So as I have 1 year in the country, the dean of our university, of the international faculty, had called me to leave what I was doing in the leave whatever lesson I was doing. On my risk to reward ratio, I put an alert. I think you shall see it on some of the thumbnails. I put an alert when the first take profit 1 is to 1.35, when it is hit, so that I'll be notified. And then when it was hit, I adjusted my stop loss to break even. As our trading plan, as our trading goes, as I have always said, like when it reaches 1 is to 1 risk to reward, when your trades are in a profit which is equal by one, or a little bit more equal than your loss, I put them in break even. So that's what I just did. And then after that, the time it come, I had to run to the train station to take the students and help them get into their hostels, and others to a hotel, because those were the officials. They were not going in a student hostel. So I had to close my positions, all of them. I had to close them because I was going to help them. And by that time, I think it was around 1:35 p.m. So it was now pretty late because at around 3:30 in 2 hours time, there was going to be news. So on that small consolidation at around 1:30 p.m., right, I closed all my trades and went to help the juniors. And then, boom, look at what this trade gave us. That's when you see that if you have a strong technical analysis, most of the times the fundamental analysis will just respect your technical analysis, no matter what. But I don't like trading news because you don't know what happens in news. You see, this is respecting the technical analysis, but this could just be a huge week here, and it will stop you out. This is why I don't like trading news. There's unpredictable volatility, and you will never know uh, if it will hit your stop loss before it goes for your profit. But most of fundamental analysis respects technical analysis. I don't know, they're just in sync. That's how the markets are, they're just in sync. So with that being said, guys, that's all about this video. That's the only trade I took yesterday. I didn't take gold, didn't manage to take it. So see you guys in the next video. For now, peace out.